Welcome to Market Momentum. Wow, what a week. The markets got completely thrown for a loop, and you know what? It all came down to just one single, unexpected comment.
So today, we're going to break down exactly how one little sentence managed to spark chaos across the board. We're talking stocks, metals, and crypto. All right, let's dive right in.
So, where did all this start? Well, it kicked off with a pretty surprising admission from the Federal Reserve, and not just from anyone, but from the chairman himself, Jerome Powell.
Yeah, this quote right here, this is what sent absolute shockwaves rippling through the market. And look, this wasn't just some off-the-cuff remark. No. This was a direct challenge to the whole story we've been hearing about a super strong U.S. economy. All of a sudden, the entire market had to deal with this brand new, kind of scary reality. What if those strong jobs numbers, the ones we've all been relying on, are actually inflated? I mean, the Fed itself was basically saying, hey, that picture, it might not be as rosy as the stats make it seem. So you might be asking, what's really behind all this doubt? Well, it comes down to a statistical tool called the birth-death model. Sounds a little dramatic, right? Basically, it's a model they use to estimate jobs from new companies starting up and jobs lost from companies going out of business. The problem is, it can lag behind what's actually happening in the real world. And Powell's comment, he was pretty much suggesting this model was, in essence, making up jobs that weren't really there, painting a way stronger picture than what's happening on the ground. And the reaction? Oh man. The US stock market basically acted like a ship in a massive storm with no rudder. Just total confusion. Let's break down exactly how all that chaos unfolded.
I mean, we saw these wild, sharp swings. First, a big surge up. Then, bam, a sudden sell-off. Then it kind of went nowhere for a bit, just sideways, before another sell-off. And then, you guessed it, another rally. It was just pure chaos as investors were scrambling to figure out what on earth this all meant.
And this right here really just captures that confusion perfectly. Just look in this split. You've got the S&P 500 down, the tech-heavy Nasdaq even more so, but then look over at the Dow Jones, it was actually in the green. I mean, the market was completely, totally torn.
So what was going on? It really boils down to this. The market was being pulled in two completely different directions by two powerful stories. On one hand, you had the fear story, the idea that, the economy is secretly way weaker than we thought, and maybe we're even heading for a recession. But on the other hand, you had the hope story. This one says, hey, if the economy is weaker, well, that gives the Fed the perfect excuse to start cutting interest rates much sooner, maybe even as early as April.
But here's the thing. Despite all of this short-term noise and craziness, the underlying long-term analysis really hasn't changed. The positive outlook for U.S. markets, it's still there. The expectation is that we could still see new all-time highs on the horizon. All this volatility, it's being seen as just a temporary knee-jerk reaction, not some big fundamental shift in the market.
Okay, so while the stock market was going through all that turmoil, the precious metals were telling a completely different story. So let's pivot and take a look at gold and silver, because believe me, they are on two very different paths right now. For gold, the message is pretty darn straightforward. Even with all the recent price swings, the bigger, broader trend is still pointing up. This isn't about trying to perfectly time the market. It's about strategically accumulating over time. So why so bullish on gold? Well, a couple of key reasons. First, gold is holding strong above its key moving averages. The 50-day, the 200-day. That's a classic sign of strength. Second, because of that, any dips in price start to look like buying opportunities, not reasons to freak out. And third, you just have to look at the long-term trend. It's still pointing right up to the sky. Now, silver, that's a whole other story. Silver is actually flashing some pretty big warning signs right now. After a really rapid run-up, the technical charts are basically screaming that now is a time for patience, not for jumping in aggressively. And let's get into the specifics, because this is where it gets really interesting. A key momentum indicator, the RSI, has shot up into extreme territory. We're talking overbought. And if you look back at the charts historically, whenever this indicator gets this high, a price correction, a pullback, almost always follows. So the play here, it's pretty clear. You wait. You wait for that potential pullback to find a much better, much safer entry point. All right, and finally, let's turn our attention to the crypto market. And you know what? The main theme here is also patience, but for some slightly different reasons. So
here it is, the big question on everyone's mind after this recent pullback. Is it time to buy Bitcoin? Well, the answer really, truly depends on your situation. Are you already holding some, or are you looking to get in for the first time? Okay, so the advice here is broken down very clearly. If you're a new investor, someone on the sidelines, the recommendation is to wait. Just wait. Don't jump in right now. Instead, you want to wait for a confirmation of strength, specifically for the price to get back above that key $93,000 level. Now, if you're someone who already holds Bitcoin, the strategy is totally different. You hold. Just hold your position. The long-term weekly charts are still showing that the underlying support is strong and very much intact. And zooming out, the broader outlook here is that the major cryptos, think Bitcoin, Ethereum, they've been held down, they've been suppressed, and they're looking pretty cheap right now. And all that pressure, it could be building up like a coiled spring, ready for a really sharp, really aggressive move to the upside as soon as the market finds its footing again. All right, we have covered a ton of ground. We went from the Fed's surprising moment of honesty to the totally conflicted reactions across stocks, metals, and crypto. So let's wrap this up and put it all together. So here's your strategic summary in a nutshell. U.S. stocks, look past the short-term craziness. The big picture is still positive. Gold, any dip you see, is an opportunity in a long-term uptrend. Silver, the word of the day is patience. Just wait for a better technical setup. And Bitcoin, if you're new, you pause. If you're already in, you hold. Simple as that. And that really leaves us with one huge, lingering question. If the official data from the government can't even be trusted at face value anymore, I mean, even by the Fed itself, it forces all of us to ask, where do we look for the real market signals now? What data actually matters? That's a whole new layer of uncertainty that the market is going to have to figure out how to navigate going forward. Hey, thanks so much for joining us for this market breakdown. If you got something out of this, we'd really appreciate it if you'd subscribe and give this a like. It honestly helps us a ton and lets us keep bringing this analysis to you.